This morning, we want to help you navigate the stock market during this volatile time. It's part of our week-long series to help you save money. Each morning here on the Morning Show, we have brought you stories, advice to help you reduce debt, establish an emergency fund, save for big investments like college. And we know that many of you invest in stocks to make money, or maybe you're thinking about getting into the market. So what should you do right now? The Dow is down again this morning. In fact, it's down, triple digits, almost 200 points. Joe Krier, partner at IIWWII Trading, is joining us via Zoom this morning to help navigate this. Good morning, Joe. Always good to see you. Thanks for joining us.
Good to see you, Jen.
So given the volatility, Joe, of the market, is now the time to jump in with both feet?
No, but this is a good time to kind of take a look at things and maybe build a watch list and perhaps even take a look at what you have and see how it's reacting to all these crazy gyrations in the market. So if nothing else, it's a great testing time to see how your portfolio is holding up. And by the way, everybody's losing money together. So, that's just how it is once in a while.
I'm not sure if that makes me feel any better, but given the volatility that we've seen, particularly in the last day, just yesterday, that dramatic downturn and then it rebounding, thankfully, at the end of the day, I mean, would you suggest that people maybe pull out right now just to play it safe, particularly if they're older and are concerned about their investments as they prepare to retire?
Well, if you're losing sleep and your health is failing as a result of it, yes, you should sell down to the sleeping point. But making panic decisions based on emotion is exactly what's pushing this market all over the place. And, pundits and retail investors alike are trying to take each headline and extrapolate that into how it's going to impact the next 5 years. And sometimes you have to sit back and just let things play out a little bit because the world's not going out of business. It's just going to adjust based on what's going on in the world here.
And the reality of the stock market, as you have told us over the years, is it's really kind of managing risk and making decisions not day to day, but maybe thinking ahead. That said, for those who are just starting out, there are plenty of ways really to invest, from bank savings accounts to Robinhood. I mean, how do you sort it out? What advice do you have?
Yeah, well, first of all, it's commit to putting some effort into this. This isn't gambling, although a lot of people think of Wall Street as a casino. If it is, we want to be the house. And by doing that, that means let's take a look at ourselves, see where we fit, and then look at the tools out there. Things like some of the apps that are out there that make it so easy to squander your savings. That's a little bit risky, but you can still use those for a small portion of your money to maybe learn the ropes. And, just having a basic plan framework to work within is a great starting point.
And also setting guidelines, right? So that you don't suddenly find yourself losing it all.
Yeah, you really have to look at yourself. You have to set some rules in advance. And, there is a point when I make an investment where before I go in, I want to say, when is it that I'm going to acknowledge that I was wrong? And I don't want to stay wrong too long. With good quality companies that are paying dividends, you can afford to wait and hang on with those blue chips. But if you're out there speculating on, new stocks that don't have earnings yet, you just really have to have an exit plan. And also allocating your money so that small portions are in the riskiest areas and larger portions are in the safe areas is a balance that's worked through centuries, really.
And it's all about balance. Joe Krier, thanks for your time this morning. We appreciate it.
Thanks, Jen.